Well, good weekend all. Ira Epstein, and here we are with your metal market wrap-up, and this is the weekend edition for August 9th, Friday, 2024. What a week. If you think about it, we saw crashes in the market, yes. In Japan, down 12.4% in one day, the biggest crash there since 1987. We saw our markets let go to the downside. I think it was the biggest decline in one day so far this year. And then we saw the market come roaring back and finish off, believe it or not, in stock indices about unchanged on the week. Hard to believe. So what's going on? Well, number one, you're in the dog days of summer. You've heard that term over and over. You're trying to make something when there's often nothing to make out of it. We know there's a world event where at any point Iran could turn, hit Israel. How they hit them? Is it surgical? Is it civilians? Is it military? Is it with all their groups, their surrogates there? Or is it them independent? Nobody knows. What we saw today come out is the Ayatollah came out and instructed his commanders to do damage to Israel. That's on all the news wires. So given that they did a practice from what I believe it had to be in Tehran airspace where they didn't want airplanes coming in for 3 hours, I think that was on Thursday, they're getting ready for something. When it comes, it comes. Israel, in the meantime, continues daily. 40 people killed, 50. This has got to come to an end. I think we all realize that. I'm an American. I'm not an Israeli, obviously, and I look at it, and there's a point where how do you end this? But I understand their argument. They'll end it if Hamas will leave because they don't want them to do all this damage, reconstruct, and they're there again doing it. I'm going to ask the question I've said all the way through. How do you kill an idea? That's the problem. All right. I think you kill it by giving them something where that idea eventually fades. But I don't know what that is, and I'm not a politician. For the day, gold came back up $10. Silver stayed lower. We've seen over and over where the gold-silver ratio is favoring the gold. The copper market got a bounce because we saw some positive CPI numbers come up in China. And now China's saying they're starting to look at interest rates and how they can make the bans more effective. I have no idea what they're talking about. They got to cut rates. They got to get the consumer out there, and they got to get people who want to buy their goods internally. That will help the copper market. On the energy markets, I would assume you're going home with a small bid because nobody knows what's going to happen with in the Straits in the Middle East over there. And in the grain markets, well, you have a big grain report coming. Speaking of that, let's take a look at the news coming out on Monday. First of all, no major economic news. You got the USDA grain supply demand report at 11. You got the Treasury coming out with their receipts and outlay numbers at 1 o'clock. We did see Baker Hughes, since we just spoke about oil, that the rig count rose to, and I'll have in my full report, I not only have this, I show you what Canada did, other countries, so you get a lot more information than I put up here. Tuesday, we're going to get the US PPI. Wednesday, the CPI. Thursday, we're going to get retail sales. Now, the one thing we know, the consumer has been pulling back on buying of goods and services. Are you not hearing that we're hearing everywhere that you board, you know, the social medias where the B&Bs that you can go out there and do things with, airlines are complaining that the pricing's no good. So what's finally happened, and it has taken time, is items got too expensive and the consumer's not traveling. But he's not doing other things. He's not eating out the way he was. You're seeing that one store after the other. You know, today I was looking at Potbelly, and they've got a special meal at $7.95. I was watching them talk, and they're noticing that their store sale unit price is up, but I don't know if their profit's up. Again, you throw out these cheap prices, you see what's going. McDonald's stores that the franchises that'll go along with them, they're going beyond August with these pricing. People are price sensitive. They're tapped out. They're tired that every time you turn around, there's another cost. I've been getting in all the bids for the hurricane damage that happened to me. Honest to God, I'm sitting here shocked at some of them. I go, how much is that? I got a fence, an iron fence in the front, and a section. up to $3,000 for a section of a fence. The whole thing didn't cost me that when I put it up, all right? There's something not right. And you just look at this and you wonder what the heck is going on. But let's go to the market because that tells us what's going on. First, gold closed at an all-time high on a monthly basis. We're not through with the month, but at this point in the month, you're at that number, okay? When we come over to the next chart, on a weekly basis of gold, weekly now, I'm drilling down, all-time high close. Okay. I have been friendly gold. I'm still friendly gold. I think gold can go to 2,600 this year unless some event happens that I don't see at this point in time. From the fundamental approach that I've gotten, I'm bullish. The Fed's going to start cutting rates. Others are. It'll take pressure, probably drop the dollar, make gold more affordable. China's been out of the market for a couple of months, not buying. I believe that eventually they'll start buying. India's been a huge buyer, and they've been lowering the tax on all their gold, metal, all types of imports. We'll see. When I look at the chart action, the market is gearing up for something. You have a pattern of higher lows, but you also have lower highs. So when I have that pattern, it's this. You have a market that's coming into a V shape. And where the apex comes will tell us, is it going back down or up? That's how I look at it. Now, to get me bullish, you have to take out 24.77. That would continue the pattern of higher lows without first taking out this week's low, and then give me a higher high, okay? Next, I look at the chart and go, where do I think the market's finding support? Duh. You do see it, am I wrong? How often do you hear me here say, look at the red line, that's the line in the sand. Markets, when they're over it, like to go back to it, figure out what they're going to do next, and from there you get the game plan right in front of you. Where's the resistance? You tell me you're not seeing that the Bollinger Band is doing its job, but it's narrowed in. Narrowed in Bollinger Bands are like a spring. You're winding in a pipe, and as that pipe keeps winding this way, it eventually bursts out. That's what it did here. The tighter you wound it, it eventually bursts. Now, a burst can be down or up. It doesn't have to be this, but right now more things point up than down. World events point to that, and world economies at this point in time. Next, I look at the slow stochastic. Well, this is why I'm friendly still. You've worked off the overbought condition. When you lost the bullish embedded reading right here, I said I thought you'd make it back to the 18-day average to fight your battle. You did. And now, if you get over here, you might get one of those spike moves. Wouldn't surprise me at all. Gold-silver ratio hasn't looked back. You're into this resistance. I agree with that. Could the market go higher? It could, but it's got to fight its way. So somewhere along the line here, I'm looking for silver to find its footing. What's holding silver back is industry isn't in need today of copper or other things. Yet I'm reading a report where there's the Copper Association is saying the copper miners of the world are plugging in more copper to meet world demand. And I'm going to say, what are you talking about? There's a reason copper went from $5.20 to under $4 a pound. There's plenty of copper right now. But what can you do? When I look at silver, well, on a weekly chart, is anything here bullish? It's been bearish. But at 26.43 is where I see the big support. You're oversold. And between there and the 24.06, I can see the bigger number. Are you really going to go back to 24.15 to 24.06? I don't think you will. So any move back over here, and let's take this on a weekly basis and go back, and it's a big number, 29.35, that would end the bear trend. From where you're at, that's $2 almost, $1.80. First thing that'll happen is it'll keep getting sold on the rally, so I don't think it's quite time. In the copper market, I have shown you over and over, I thought that if you could drop, you'd find the big support waiting for you at the 200-day, the 100, and the Bollinger Band. And I never said go long. I said that's where I expect major short covering. I will stay with what I said. You're oversold. You're into that. I'm not bullish, but I have reasons not to be bearish until you can prove you can get through all that, and these numbers become resistance points, which means you've got to drop even more. When I look at the platinum market downtrend, lower highs, lower lows, all it did is rally back into the resistance of the 100 and the 18-week average. The pros, I think, sold in this whole range, and I think they'll lift shorts if they can get to 895.90, and I don't think they'll stay short if you get over 989. I think they'd come out of their positions. And last, in the dollar index, I'm just not bullish the dollar at this point. You know, September 18th, which is still 5 weeks away, is when we start the two-day FOMC meeting. The market's going to look at that and say the Fed's going to cut, and I agree with that. I don't know if they're going to go 25 or 50 points. Some people will say 75, but we've already seen the alarmists that came out on Monday calling all over CNBC and other stations, we need a 75 basis point cut now, and here's why. Is the Fed behind the curve? They're behind the curve. Do they realize it? I don't know. If they do realize it, they'll probably go 50 basis points. Is that the end of the earth? No. But if you understand, most people think when the Fed cut, the market goes up. Often, not all the time, often, when the Fed makes a cut, the stock markets drop on that news. Not necessarily other markets. You have to look at each market as to how it impacts it. But you look at these things. Go back, Google. Use your artificial intelligence. Ask the question, when the Fed first makes a cycle cut, is that bullish or bearish the market? And see what that tells you. It's an interesting way to do it. This morning, I came out and I said, today will be a pivot point day. I even put it on our website as a headline, because I said, I don't think you're going anywhere. I think it's going to be a turn. Tell me that's not what we had exactly today. If you learn to use pivot points on a day like today, for those of you that are in and out traders, this is one technique that I have been using 30 years. So I think I'm familiar with it. It was taught to me by a pretty interesting guy named Larry Williams, and it's very interesting. So when I look at all this, you look at the slow stochastics, the momentum is to the market. And I tied it together years ago with slow stochastics, momentum, and I found it worked better for me. You develop your own techniques. Everybody does. So, pivot points, go to iraepstein.com. You can also take a look as you go in there at the other free offers we have and see where that carries you. In the meantime, I'm Ira Epstein. You have yourself a great day, and I'll talk to you all later.